Alright guys, welcome back to Roxham TV and also welcome back to Gem Crypto. Whichever platform you're watching on, I hope you guys are hanging on tight because we had a crazy weekend, and as I mentioned, Bitcoin has been kicking the can down the road because 2 weeks ago we thought we're going to get a confirmation whether we're closing about the 50-week moving average or not. Ends up we did. That was 2 weeks ago, but over the weekend, looks like we broke the promise. And we know the gist. Like if we end up getting a close, like a weekly candle close below the 50-week, this is an early sign that we are heading for a bear market. Not only this, because technically speaking, if we have two weekly close below that, that is ready definition of bear market. Point being, right now we only have one, but I'm already calling for it. So we are really at the end of the bull run. Well, but bear with me because TA wise, everything is not looking good on my charts. And you know me, like I love to use data to back up instead of some narratives or some, I don't know, Donald Trump tweets saying that we're going to print more money. So I don't like using narratives, but like data wise, everything reflecting on the chart, I'm afraid to break it to you. It doesn't look that great. But what's good news for you is that if we are indeed heading for a bear market, we are heading straight to 200-week moving average, and right now it's sitting at $55,000. So I'll be extremely happy to see a $55,000 per Bitcoin. And when that happens, you know what I'm gonna do? I'm gonna scoop in and buy every single Bitcoin that I could possibly can. All right, so without further ado, let's actually hop onto the chart because we have a lot of news to go through as well. We have US and China kind of coming to an end when it comes to the rare earth. We're also going to look at some rare earth stocks because one company I really like a lot, and I see a lot of promising, that there are a lot of promising possibility coming forward, and I'm going to share with you guys in a bit. But very quickly, since that Bitcoin is so volatile and we actually closed below the 50-week, let's start with the daily chart. And as I always mention, like since the 126K, so that is, it looks like a cycle top, like of course, nothing confirmed, but looks like we're 70 or 80% confirmed that this is a bear market. So I was actually bearish from 126K. So that was back in basically 6th of October, a month ago. I was bearish here, not because I have a crystal ball, but because from a technical standpoint, from a TA perspective, Bitcoin has been bouncing off these key levels, so these critical levels. Whenever Bitcoin trying to reach, we basically get rejected. So here we got rejected again. Here, that's another dead cat bounce that happened on 28th of October. And here we came close. So that was 11th of November. Looks like that's a dead cat bounce as well. I remember because this is just like last week, and people on Twitter are saying that, okay, looks like we are heading to a higher places, but I was like, no, like overall it's still inside this downtrend. If we have a daily close actually above these critical levels, then perhaps maybe there's like the best time is still ahead of us. But from a TA perspective, looking at the chart, I hate to break it to you guys, we are still trading below that. Not only this, we also have a death cross. For those of you who don't know what a death cross is, let me actually remove that trend line because it's a little bit confusing to watch. So there are two lines here. So we have the red line and we also have the blue line. So what the blue line stands for is the 50-day moving average, whereas the red line stands for the 200-day moving average. And whenever the red line, so the 200-day moving average, goes above the 50-day, that's a death cross. And here we have a death cross forming. Well, it sounds very scary, like death cross. That means, okay, we're doom and gloom, we're basically done. But it's actually not as bad as it sounds if we hold above the 50-week moving average. So that's the thesis. We have to bear that in mind. The reason why I say death cross might be actually, it could be a local bottom. It end up being the best opportunity to scoop up that BTC. Well, here we have a death cross form, literally 2 days ago on 15th of November. But if we actually zoom out to look at when this death cross happened, for example, here we have it again. So in April 2025, that was 6th of April 2025, we have a death cross formed. But if we actually look at the price action, that means we actually near the local bottom. We bottom at 74K. Well, point being, this death cross being the best opportunity, it just turns out to be a correction. But how can we differentiate whether this is a time to scoop in or not? Basically, the key lies with the 50-week moving average. So it's a little bit confusing. There's a lot of data, but please bear with me. I'm trying to make it as simple as I could. So the right side, we have the daily candles of Bitcoin. The left side, we have the weekly candles of Bitcoin. All right, so as I mentioned, the death cross happened on 6th of April, so 2025 here. What happened on the left side of the curve is that Bitcoin, if we zoom closer, we actually managed to stay above the 50-week. We touched the 50-week, so we kissed the 50-week, but we closed above that. So that changed the whole stories, whether we should scoop in or stay bearish. So here we have the death cross. So here we have the death cross that happened in April, and then here again we have the death cross. So it happened in August 2024. So let's go back to the August 2024 on the weekly chart of Bitcoin. So what happened here is that again we are just like touching the 50-week. We didn't close below the 50-week, so that end up being the best opportunity to scoop up that BTC. So that cross is where the local bottom is near. All right, so let's also zoom out to all the way back to 2023. How about that? Okay, September 2023. Here we have another death cross. So if we zoom out to the weekly candle of BTC, here again, so in September 2023, we didn't even touch the 50-week. We were trading above the 50-week. So that's how we differentiate a death cross being maybe the local bottom is near, end up just a correction and it's best time to scoop up that BTC, or we have bigger correction and so-called we're heading to the bear market. So the reason why the 50-week is so important, and let's zoom out and let's zoom all the way out before 2023 we have the death cross, and before that we had a January 2022 death cross forming. And if we zoom all the way out and let's go to the weekly chart, here we have the confirmation, because 2022 January, this death cross form. And if we go to the left side, which is the weekly candle, right? So here, if we zoom closer, what you will witness is that it's basically what's happening today. We have a weekly candle closing below the 50-week moving average. So technically speaking, we need 2 weekly candles below the 50-week moving average. But since I'm seeing all the signs, basically all the signs have been checked, I'm saying, okay, maybe we are at least 70 or 80% confirmed that we are heading for a bear market. So it's up to you to decide what you're gonna do and what's your strategy. But at least I'm just telling you what I see on this chart, and it's not looking particularly great. And if we go back to the first of all, the November and October narrative is Downtober and also Downfember. And last time when we had 2 consecutive months having a negative number for BTC return. That was like in 2018, and we know that was a bear market year. Well, I do stick with the thesis that 2026 is going to be a bear market because it's lined up with Bitcoin 4-year halving cycle, and it's also lined up with the midterm year. And we know when we have a midterm election, usually it's going to be very bearish for Bitcoin because what's happened with the political parties is that there's so much uncertainty and the markets kind of don't know which direction should head to and end up being just so much volatility and end up being a bear market for Bitcoin. All right, so that's for 2026. And as for the death cross, well, it does look like it's just the beginning of the bear cycle, of the bear market, because here, if we zoom out, this is when the death cross happened. And if we go to the weekly and see how much lower we went, let me zoom all the way out to potentially see the bottom. So here, death cross happened. So we had another 65% drop from the current price. So that current price back in 20, what was this? So January 2022. So we're gonna have another 65% drop from where we were, and we were at $49,000. So you have to ask yourself a question because everyone has different financial needs. Like, would you be okay of hodling Bitcoin if it drops another 65% and you have to hodl basically, let's see how long. There's probably longer than 300 days. So you have to hodl for 350, okay, 350, maybe 340 or 350 days before we see a cycle bottom forming. So ask yourself that question. If you're okay with that, then you know what to do. Just like hodl your bag. And but if you have other commitment, I don't know, like support your kids or pay your rent, then maybe it makes sense to take some profit off the table. Because like if you have been watching this channel, you know we have been doing a lot of analysis and we have been buying at the really low. So like personally, I'm not scared of bear market because bear market is when you can make generational wealth, not in a bull run. So bull run usually is really good for trading and your side is always stuck to the monitor. You're just like so curious how high Bitcoin's going to go. But like trading in a bull market is a lot of fun, it's quick money, but buying in a bear market is how you make those at least 5x gains. All right, so as for the weekly chart, let's also hop onto the weekly chart because we haven't actually done so. Okay, weekly chart of BTC. Let me close all the drawings because it's very annoying to watch. Okay, we know we are trading below the 50-week moving average. And if we have another weekly candle below this 50-week, so 50-week right now sitting at 100 and let's go 103K, okay? 103K right now trading at 95K. That is, okay, we are halfway there. But bear with me, not just this signs that is taking for me to call it we are in a bear market. But also if we hop onto the RSI, so RSI, okay, let's maybe close it a little bit. Okay, there is a key level that I'm watching from the weekly RSI. So usually when we drop to 44, so below 44, we're going to have a deeper correction, meaning the bearish momentum going to continue because that's what happened before. So last time we happened, so here again in 2022, we closed below the 50-week moving average. And at the same time, we broke below the major support trend line. So the major critical level on the RSI, which is 45, we broke below 45 and the rest is history. So from here, when we broke the RSI, we dropped, that's again another 65%, and then we actually dipped below the 200-week moving average. So Yeah, that was a lot of pain, a lot of panic. So this is one, like another bearish sign I'm seeing from the TA, from the chart, just from a TA perspective. And the third one that I saw is actually the bearish RSI momentum, so the bearish divergence. We have been forming this ever since March 2024. So like since we are looking at a higher time frame, like we're looking at the weekly chart, like for this to play out, it takes months. Because like look at this, like we have been forming this bearish divergence since March 2024, so a year and a half. It looks like finally we dropped below the 50-week moving average. So everything is aligned with the Bitcoin 4-year cycle, like being 2026 is like I have more confirmation that 2026 is going to be a bear cycle, because based on the historical price of Bitcoin, we know 2014 it was a bear cycle, and then 2018 it was another bear cycle, 2022. So if you basically like simple math, +4 due to the 4-year cycle, like 2026 going to end up being a bear market, and it's going to be extremely boring. So point being, let's come back to the RSI, weekly RSI. We closed below the 50-week, and this bearish divergence I just couldn't happen to ignore. Like, okay, we have the bearish divergence, we are closing below the 50-week, and then we have the death cross on the daily candle. That is like the recipe for bear market. So yeah, I'm over the weekend I took a little bit profit off the table, because it just looks like it's the most sensible thing for me to do for the time being. And if you ask me like when we will see the cycle bottom, let's also hop to the weekly chart of BTC. Let me close the RSI, and we are here on a log scale. And basically, why people are calling 6th of October the cycle top, and basically we have been saying that for even weeks before. This is due to the magical number of the 4-year cycle. So if we calculate from the cycle bottom to the cycle top of Bitcoin, because we have 3 data points here, if we measure that, we know the cycle roughly lasts around 1,064 days. So if we apply the same theory, that's how we get the prediction of 6th of October 2025 being a cycle top. It looks like everything is aligned perfectly. Bitcoin just wants to do its thing and wants to follow the 4-year cycle, and it's completely fine. So if we apply this same measure, so usually when we have the cycle top to the cycle bottom, it's gonna last roughly a year. So 350 days or 65 days. So roughly a year from the cycle top to the cycle bottom. So if we apply the same metric, that means we're going to see a cycle bottom around 5th of October 2026, so next year. Like the bearish momentum looks like it's going to continue. As I keep mentioning, there are 3 groups of people. Like the first group is that these looks like the 4-year cycle is being so intact, play out so beautifully. I'm not gonna lie, like in the beginning of the year, I thought we're gonna see a cycle top in November or December, basically Q4. The reason why I had this theory is because like even with the 4-year cycle, you have different ways of measuring stuff. So you could measure, so here we were using the magical number of 1,064 days, but what you could do is if you take the cycle top, this cycle top, we'll get a different number. So we'll get like 1,463 days, something around that. But point being, it's usually around 1,400 and something days. So if we use that, so from the cycle top, if we apply 1,400 something days, we're going to get November 2025. So We are slightly earlier if we use this metric, but again, this just gets to show us the markets don't care about how we feel. The market don't trade on your emotion. Like we just have to trade with the market and deal with it. And yeah, Bitcoin can be quite brutal at times. Bitcoin just doing things. So yeah, looks like we're gonna see a cycle bottom in 2026 October, but like I'm eyeing on this chart very closely. Let's also hop onto the 2-week chart of Bitcoin and really build up on that momentum. I mean, really build up on that. On my case and why I kind of 80%, like 70 or 80% confirm that we are in a bear cycle already. So let me remove this drawing. One thing I talk about that, and I share that in previous live streams with my community on Roxham TV, is that we are seeing this rising wedge forming. And as we know, rising wedge is a bearish pattern. How we can confirm a rising wedge pattern? Basically, we need 5 points. So 1, 2, 3, we're touching the bottom, the basically floor, and then 1, 2, we are touching the ceiling. We're touching the top of that resistance, and that's how you confirm we are in a rising wedge pattern. And as you know, this is a bearish pattern, and we are on the 2-week time frame, so it's on a higher time frame. And what happened is that we looks like we're breaking out of this floor yet again. This is a very bearish momentum. If we just apply, actually, let me close the 50-week because there are too many lines and I like to be very organized. All right, so how we could find this bottom is basically if we take the width of the rising wedge and we go to the breakup point and it looks like it's here. We'll go to around 50, 59 or 58K. Surprisingly not. Like if we pull out the 200-week moving average, okay, 200-week is, oh no, sorry. We are on the 2-week chart. Let's also actually maybe use this one instead. So surprisingly, if we use that to see where the 200-week moving average is sitting at, is roughly around $57,000. So the rising wedge is aligned with the 200-week moving average. So maybe that's the cycle bottom, or maybe we're going to see that in October 2026. But looks like everything is aligned. I have all these like checkbox, and looks like it's taking most of the checkbox. Well, yeah, we just have to endure a 1-year pain of the bear market. But again, this is how you make generational wealth. We're seeing the bearish pattern forming, so we have the rising wedge. And then another thing I noticed from the 200-week is we broke out of the hour size support. So this is on the 2-week chart. And if we trying to find the support line for the hour side, you see that we broke below the support line. This is another bearish signs I'm seeing from the chart alone. So just from a TA mentality, it's taking a lot of box. But looks like if we just apply the same measure, we're gonna see a cycle bottom in October 2026, and that's completely okay. Like one thing I find it really interesting is how well TA has been predicting the future. And I'm a data girl and I trust my math. Looks like my math hasn't failed me yet. But when it comes to on-chain, like we know this is a very popular website. So it combines all the bull market peak indicators. So those are the most popular 30 indicators and put it under one website. And this cycle is so different and it's so weird because none of these indicators was peaking. Well, okay, maybe there was one, the odd season indicator. So it was just like a peak for a week or something. It was extremely short lived. But most of these indicators, they didn't even flash. And I would say one of the reasons that we didn't see like on-chain is working too well under this cycle is basically these indicators, they didn't take into the account of diminishing return. Because as we know, Bitcoin is getting so big, it's becoming a macro asset right now. We have to counter in, we have to factor in that diminishing return. Like Bitcoin is not going to do 10x compared to the previous cycles, because like moving Bitcoin, like moving its market cap, like even 4 years ago is much easier compared to now, because Bitcoin is multi-trillion-dollar asset. So that's why we have to factor in that diminishing return. But it's a good thing that we see TA hasn't failed us, and looks like it's offering a lot of perspectives. And really ask yourself a question, because looks like we are almost confirmed this is a bear market. I'm sure I'm like one of the very few influencers out there are calling this. But again, I like to use data to back up instead of some narratives that we feel is going to happen. We think it might happen because some liquidity injection. But like the charts haven't failed us, I'm sticking with the TA. All right. Anyway, so that's a lot of analysis. That's a lot of number. What we're going to do right now is actually take a little break, and we're going to look at macro and how China and US is dealing with the whole rare earth deals. And after that news, I'm also going to drop you some of the alpha. Well, at least I think is a really good opportunity. Of course, not financial advice. I'm just sharing my own research, my own analysis, and you guys can draw the conclusion. Anyways, I'm going to see you guys after a little break, and let's dive right in a bit.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin?
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
I think
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxum, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Rocksome, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Wait, do I look at the side camera or the front one? The side one, right?
You're alive.
Oh, I just realized I was live already. I didn't hear anything from my monitor, but sorry about that, guys. All right, anyways, welcome back, and I'm sorry about that. Um, as I was talking about the China and US rare earth deal, well, this is actually a good news because, like, sorry, I'm watching the the comment. That's extremely funny. Like, someone told me to look at the front camera. So thank you so much, Mick Y, for telling me this. But anyways, as I was saying, U.S. and China rare earth deal. Looks like we're gonna have a deal before Thanksgiving, and this deal is not it's not big. It's not a big phase two agreement. It's I would say a truce to calm down tensions from earlier this year. Like the main focus is rare earth elements. So of course REE. So that stands for rare earth elements, and the minerals needed for EVs, for chips, batteries, and military tech. So China controls most of the, like almost 90% of the global supply, and US wants to reduce dependence but cannot do it overnight. So the two countries already met in early November. So between Donald Trump and Xi Jinping in South Korea, we actually covered that on Roxham TV as well, and agreed to pause new tariffs and pause China's export controls. And what we have is that the Scott Basson, he mentioned this yesterday. He said the rare earth deal is hopefully finishing by Thanksgiving. That would be 17th of November. But so far as of today, it's still not done. So the trade tensions actually exploded in early 2025 after the US sanctions Chinese tech companies, and China responded by restricting exports of 7 rare earth minerals. Things got worse in October when China tightened and controls again during Taiwan's Double 10 holiday, and Trump countered by threatening 100% tariff rates on all Chinese goods. That news wiped out the $1.65 trillion of US stock market value in one day. Only after the Trump and Xi Jinping meeting in November, so late October, early November, did both sides agree to step back and restart talks again. The goal now is to lock in a short-term deal to prevent markets from panicking again. So what they're going to talk about It's basically, of course, rare earths is very much on the table. China will probably suspend export controls on those rare earth, and then China will issue general export licenses for US companies. They will also remove military tariffs, and they promise that they're going to buy more US soybeans. But basically, what's happening is just trying to set everything in paper, like black and white, because like the talk in South Korea, it was great, but we still need to have a proper deal. Both parties signed the paper, write everything down in black and white. So let's see if they manage to finish this by Thanksgiving. Like the chances are high, moderately high. Negotiations have moved forward basically since the talk in South Korea. So both sides actually want stability, but trade deals often run late, and there are still unsolved details like US export licensing rules for software and dual use tech. If delayed, talks may spill into December, which could bring more market volatility, like something both governments want to avoid after the recent attack and the stock market kind of crashed a little bit. Last thing Donald Trump wants. But anyways, like we still have to wait for the paper actually being signed between these two countries, these two parties. But one thing I was like teasing during the beginning of the show is a stock that I'm eyeing very closely. So MP Materials. I cover that on Roxham TV and even earlier on Jamstream Crypto. But this is a stock like, okay, if you guys didn't know, it's the #1 rare earth producer in the US. It operates the Mountain Pass mine in California, which is the only large-scale rare earth mine and processing facility in the entire Western Hemisphere outside of China. These rare earth elements are critical for, again, EV, for wind turbines, AI chips, fighter jets, basically everything that is electronic. And China, as we know, rare earth, they control like almost 90% of the entire supply globally. So MP material comes across as really important for US national security. That's why the US, especially the Department of Defense, DoD, is heavily supporting MP material through investments, through contracts, and guaranteed pricing. This backing gives MP rare stability compared to normal mining companies. It's really volatile. Like, again, this thing is basically the political card between US and China. So whenever the tension of these two companies rise, we know MP gonna fluctuate a lot. And if we zoom out a little bit compared to a year to date, you see basically in the beginning of the year we're trading at $20, so $20, and it pumped all the way to $100. So this thing is volatile. I only get in recently, like when I saw this like little crash, I just feel like it looks like a good opportunity to scoop that up a little bit. But this thing is very volatile and it's not financial advice. It's just I'm sharing my research. That's all I'm doing, okay? And as for this company, like if you didn't know, give you guys a little background. This is again a US-based company. It's based in Las Vegas. It focused on rare earth supply chain, so mining, processing the minerals, and producing high value magnets. And its Mountain Pass facility is actually the only active rare earth mine in the United States. MP has spent about like $1 billion rebuilding America's rare earth industry from scratch because the US had lost that industry to China decades ago. Because China was very, very insightful and they have been building the rare earth empire ever since the 80s. And there's like a very famous saying from Deng Xiaoping. And he said that, okay, Middle East has oil and China has rare earth. And so far, looks like China has all the right cards and kind of have the US by the balls. And only right now, US is trying to catch up with the Chinese pace. And when it comes to MP materials or like the rare earth supply in the US, of course, like US has rare earth reserves, but MP material is the only major producer. Canada has a lot of potential resources, but almost all the projects are still in early stages. So they are still exploring, but not in production phase. So globally, MP materials control, so they produce around 5% of world supply. I mean, compared to China, is nothing, but its value is strategic, not volume based. So the reasons why I am so bullish on this company is that they are acting like a monopoly play in the US. So MP is literally the only scaled producer in the entire United States. So with US and China tension rising, having a domestic source is really crucial. And we know the culture, we know the tone of Donald Trump. He likes to produce everything in-house, so inside the country, because America is the strongest country in the whole world, yada, yada, yada. So the demand for rare earths is expected to triple by 2035, mostly driven by maybe we're going to use more electronic stuff. Maybe we're going to use more EV or AI chips or all the hardware. How about that? So MP is a monopoly in the US. So that's reason number one. Reason number two is that basically we have the support from the entire US government. Like the US government can't afford to see this company fail. So as I mentioned, Department of Defense, the DoD, has gone all in. So they bought like 15% of the equity stake in this company in MP Materials. They actually guaranteed a minimal price for key minerals, and they offer loans and multi-billion-dollar contracts. If the share price, so if the market price fell below a certain price, the DoD going to pay the MP, so pay MP, the company, or the difference. So there's like a guarantee MP is not going to lose money. And this secures MP's revenue. Even the market is weak, it reduces commodity risk and it gives MP guaranteed profits, which is extremely rare for a mining company. This still effectively turns MP into a government-backed strategic asset, similar to defense giants like Lockheed. So again, America, the US government can't afford to see MP fail. If MP do collapse, that means the US lose the only rare earth mine and separator. And that means they're going to have to continue getting supply from China, even with the military weapons. So the defense systems become fully dependent on China. And when it comes to rare earths, it controls clean energy, it controls EVs. And if MP fail, that also means the billions of dollars from the government investment is wasted. So MP holds all the cards because supplying rare earth, that means it's going to supply the US military for fighter jets, for missile, for radar systems, and for general public, maybe EV for the electronic vehicles that we're driving, and also like AI as well, because like all the AI chips, we need those rare, we need those minerals to even produce in the first place. All right, of course, there's still risk involved for this MP. It's important to consider both sides before making an investment. Like we know there's rising competition from Australia, from Canada, because the US is sourcing its rare materials, its rare earth from different parts of the world. They are really trying to rely less on China. So they're trying to make a deal with Australia or Canada, all these countries. So this is one risk being for MP materials. But I kind of like, I wouldn't play too much weight on those risks because at the end of the day, Donald Trump wants everything in-house. They want the production in the United States. So China doesn't have the US by the balls. Okay. So let's come back to the deal because I was talking a lot about the MP material. So let's come back. Let's see if they manage to strike a deal for those rare earths by Thanksgiving. If we do, it will reduce input costs for EVs, for batteries, for semiconductors and defense in the US. It also does give the United States a little bit more time to diversify the rare earth supply. So stop relying on China so heavily. China would also benefit from resumed exports while continuing to strengthen ties with Europe or other regions. So point being, looks like both parties, so both Chinese and also both the United States want to strike a deal because China needs the money and US does need the rare earth very much. All right, of course, we're going to eye this very closely. And once we have more updates about the deal, of course, the first thing we're going to do is to break the news on Roxham TV. So you guys do stay tuned. All right, let's move on to some AI news because just a few days ago, I saw this like OpenAI ChatGPT become warmer and smarter. But what's the upgrade? Like, is this a real deal or I don't know. All right, so OpenAI quietly released like ChatGPT 5.1 a few days ago, and this update responds directly to complaints about the original ChatGPT 5, which many users find it quite frustrated because it felt slow, it felt boring, and less engaging even compared to ChatGPT 4. So 5.1, ChatGPT 5.1 is now rolling out to paid users first, with free users getting it over the next few days. It's available in ChatGPT and the API comes in certain fashions like instant or thinking on Codex or Codex Mini. So OpenAI describe it as smarter and more reliable. You can change the mode, you can personalize the tone and etc. But what's actually been improved? Like, okay, guys, too much hopium here, like too much expectation. But like this 5.1, it's not like a very dramatic leap. It's more like a fix and improve release. So the goal is to make ChatGPT 5 feel more natural and more useful in daily tasks. So the key improvement includes like maybe adaptive reasoning. So here there are a few examples. So we are comparing ChatGPT 5 and ChatGPT 5.1. So here we have 5.1 instant. So this is the official example from OpenAI. So we type the prompt, I'm feeling stressed and could use some relaxation tips. So for ChatGPT 5, it feels very standard and it's very cold. So the response that we got is here a few example like effective ways to help ease stress. You can mix and match depending on how you're feeling and how much time you have. Whereas 5.1, it feels a lot more like personal. It feels like ChatGPT actually know you. So I've got you wrong. That's totally normal, especially with everything you've got going lately. Here are a few ways to decompress depending on what kind of stress you're feeling. So the whole tone that 5.1 is using, it feels a lot more personal, and it feels like that's what the user needs. And here's another example. So this is the prompt. So always respond with 6 words. So this is the prompt that being given to both ChatGPT 5 and ChatGPT 5.1. So they asked the question, where should I travel this summer? Basically the same question for 5 and 5.1. Here we saw that 5, so GPT 5 is not exactly following the prompt. So we asked to respond in only 6 words, and we could see clearly that this is not 6 words. Those are a lot more than 6 words. Whereas 5.1 is following the prompt more perfectly. So it's actually replying in 6 words, like all the reply you're getting 6 words, basically what the users has been asking for. And then we also have ChatGPT 5.1 thinking. So it looks like everything is a little bit smarter, like better for performance, and everything is following the prompt that the users are asking. Basically, looks everything looks like friendlier, more direct, following the prompt. So this doesn't actually increase its memory, but it feels every chat like more consistent. Users can also tune the model through the custom instructions. So if you want the tone to be more friendly or more direct, you can actually adjust that, adjust the tone as well. So here you can adjust to be more professional or on that. So you could change everything based on your own needs. So I would say real use case for 5.1 is that, okay, for example, for myself, I do a lot of content planning. So I have to do research and plan the materials every single day. So using 5.1, maybe it could give like a full calendar. So create a content calendar for, I don't know, crypto news for the next month, something like that. Is more cater for SEO strategies, maybe clearer reasoning, much smoother compared to GPT-5. Whereas maybe when it comes to coding, it fixes the errors like better and explains code more directly, more clearly. Overall, less prompt fighting, fewer misunderstanding, and more personal. All right, so again, there are criticism about this. Like, why would I want ChatGPT become friendlier and warmer? Like, we don't know that, right? Because like one risk that we might be running into is that, okay, if we have an LLM that is always agreeing to us, like maybe we end up feeling we are never the problem, and the problems always lie with others instead of having that self-reflection, because AI avoids disagreement because they are being too warm and too friendly right now. And GPT 5.1 still doesn't solve core issues like advanced reasoning that. Like when it comes to reasoning, it looks like the Chinese LM models are much better at reasoning for some reason. And all right, some developers say coding improvements are smaller than expected as well. So those are the risks that 5.1 is experiencing, or basically the stuff we need to bear in mind when we are using this new model, or basically all the AI LMs out there. When it compares to other models, maybe Grok 4, like from XAI, I would say like each LM model, they have their own strength. So Grok is really good for real-time data because everyone is tweeting all the time. So the data is more up to date, whereas maybe Claude is more suitable for coding, for reasoning, for coder. And ChatGPT, it feels like it's more personal, it's easier to chat with. So it does feel like more a everyday workflow, a brand follows. It does feel like a friendly assistant overall. So do try out ChatGPT 5.1 and let me know what you think. 'Cause I've been trying out as well, like using different tones. Actually, it helped a lot. Like tend to use the direct tone because I much rather someone to tell me the truth rather than just like keep blowing my trumpet. But please let me know if any of you guys from the live chat have experienced that Chat GPT 5.1 as well, and let me know your feedback. All right, so moving on to more AI news because we have a very interesting one. So Michael Berry, of course, we know the Big Short. I'll be really surprised if you guys didn't watch Big Short because it's just one of my favorite movies out there. So Michael Berry, he's really famous. He's the guy who has this hedge fund and he shorted the market, especially back in 2008. And that makes him so famous. But recently, as I mentioned, he had a hedge fund, but he decided to shut it down on 13th of November. So this news broke out on 13th of November. So this hedge fund, he has, I'm not sure if I've got the name, but basically this hedge fund, this came just weeks after he quietly sent a letter to investors, actually on 27th of October, telling them he'll be closing the hedge fund, he'll be returning all the invested capital, and he has been really frustrated with market disconnect. He just wants to focus on his own money going forward. And at the same time, news leaked that Michael Burry had placed huge bearish bets against Nvidia and Plantel. So it definitely triggered the sharp drops in both markets, in both stocks. And on X, he posted some really mysterious message like he's onto much better things on 5th of November, basically teasing out some stuff, and we just have to pay attention to the updates that he's gonna give up in a few days. So this has sparked days of speculation across the market. Like, is he walking away, or like there's something brewing in the background, because he did tease out the 25th of November gonna be something interesting gonna happen. Like, if you didn't know this guy, like, I'll just give you a little bit of background. Like, he's one of the most well-known contrarian investors in modern history. He started out as a doctor, actually, not in a finance major. He only became famous on early investing forums for deep value analysis. And then he started his own hedge fund back in 2000. He achieved that global fame for predicting the 2008 housing collapse. He made more than $100 million personally, and he made like $700 million for his investors. His story, of course, got turned into The Big Short, which is the movie, and I watched that much on Netflix. So he is known for, like, his style is very contrarian, detailed, obsessed, but he is extremely early, sometimes too early. So after 2008, he actually shut down his hedge fund for a little bit, like took a break, and then he reopened the hedge fund back in 2013. And now in 2025, he's shutting it down again. So yeah, it's interesting when it comes to the timeline. Don't know what he's thinking. But he informed, so he deregistered with the SEC on 10th of November. SEC updates the hedge fund status to be terminated, and the fund had around $155 million AUM, but only 4 clients. So I was talking about Nvidia, and one thing I find it really interesting is that he is betting that Nvidia would go down, and we are at the AI bubble currently. So what's happened is that, okay, maybe just stay here. All right, so many assume the fund collapsed because he shorted Nvidia, but the timeline actually proves otherwise. So Michael Burry's Nvidia and Palantir, so his position were actually held as September 30th, so Q3. He wrote his closure letter on 27th of October before the shorts went public. And a hedge fund got deregistered on 10th of November, still before the 13F filing became public. So the Nvidia short only hit headlines around like mid-November. So the truth is, he actually closed the fund first. The Nvidia short became public second. They haven't closed together, but they are not casually linked. His Nvidia bet aligned with the bigger thesis that he has, which is the AI boom is overhyped and very much mispriced. This is what he said again. So the reason why he is so bearish on Nvidia is that, okay, he's actually bearish on the entire tech giant. So that being Microsoft, that being Amazon or Meta and Google. And the reason why he has this argument is that the GPU's lifespan is maybe just like 2 to 5 years, and it get depreciated really fast. And that is a circular risk that they're running. Like Nvidia would invest in OpenAI, and OpenAI would buy more Nvidia chips. So there's like circular demand and the earnings being inflated artificially. This is his argument. So the way he called it, like he said, like it's one of the most common fraud in the modern era. And this immediately triggered comparisons to the dot-com bubble that experienced back in the 90s or 2000. So, of course, Palantir, the CEO, didn't like that. He called Michael Berry batshit crazy. But like I would say, some of the arguments that Michael Berry placed it's not like crazy. Basically, there's strong evidence to support his claim and his concerns. So, for example, I'm not sure if you guys know, like Microsoft has a lot of unused NVIDIA GPUs just lying around. When I say a lot, that means tens of thousands of H100s and Blackwell GPUs sitting idle. And two major data centers cannot secure electricity. Like, it's not like Microsoft didn't want to use these GPUs. It's just like we are running short on those electricity. There's simply not enough power to use those AI to use these GPUs and get going in data center. The reason why there isn't enough electricity is because the power grid in the US is extremely slow and it's not powerful, it's old and cannot keep up with the AI demand. That is the bottleneck that the US AI is experiencing. On the other hand, if we look at China, China has been sitting at number one in terms of electricity production. So look at this. So China generated more electricity in 2024 than US, EU, and India combined altogether. So that's why the Chinese LM models are getting so good, and they are trained at a more efficiently and at a much lower cost, because China, they have newer energy grid and they have efficient ways of sending energy from one side of the country to another side of the country without losing too much of that power. Whereas US, if they want to do the same thing, they end up losing that power when they are sending those electricity from one side to another. But China is really advanced. So this kind of aligns with Michael Berry's AI bubble narrative as well. However, as of the GPU, because Michael Berry comment on the GPU lifespan is that he said it's only going to last 2 to 5 years. This is a bit controversial though, because a lot of studies show that GPU can actually last much longer than that. Very few. Bearish for a very long time. Of course, he's a legend because he correctly called the 2008 housing bubble, the housing crash. So that he timed that quite perfectly well, even though there was a lag, there's a delay, but he ended up walking away with $100 billion personally. So yeah, I mean, that guy is a legend, and he's really good at deep risk analysis. Always over the detailed, he goes deep. But if we look at his track record, I will kind of take it with a pinch of salt, because almost ever since 2008, a lot of his calls are somewhat too early. I wouldn't say wrong, but it's definitely too early to say anything. For example, if we take a look at this, like he just like tweet out sell. That was back in 2023. Like if we sold, we're gonna miss another generational wealth opportunity if we did sell in 2023. And here again, he tweeted out, "We are all doomed." That was back in 2022. Like if we miss that, like again, like I managed to scoop up BTC in 2022, and turns out it was like the one of the best opportunity. I mean, one of the best decisions I've made in my entire life. So if we just like blindly follow his call, we will be missing quite a lot of great opportunities for, like I'm saying, generational wealth. So Michael Barry, if I want to make a comment on him, he's like brilliant at identifying risk. But timing wise, he's terrible. Like he's often too early. So there might be a bubble, or it's getting a little bit frothy for the whole AI trend. We know the AI startup valuation, it goes crazy, like more than $1 trillion in a year. And Nvidia, $5 trillion in market cap, is actually the first company to reach that. Palantir trades like 200x above its earnings. And there's a secular financing with Nvidia and OpenAI. So some analysts actually think this is the 10x effect of the dot-com bubble. But what I want to stress here is that, okay, the technology is real, like similar to the dot-com bubble. Like we know the internet is a very real thing. And same for AI. We know AI is real, like LLMs like ChatGPT 5.1 or Grok and Claude is showing real breakthroughs. So AI adoption is skyrocketing around the whole world. And we have global competition from China, and China keeps investing government money into making the AI models like train more efficiently, train better. And there's like multiple breakthroughs from China and surprises the whole world. So the reality is that AI is both a bubble and a breakthrough. Long-term wise, I'm sure AI continues to grow because we're trying to reach that AGI. But short-term wise, like the valuation, it looks, okay, maybe it's a little bit overheated. And I won't be surprised to see a correction of like 30% if earning miss or energy bottlenecks worsen. So yeah, this is the what Michael Barry has been saying. Do let me know what you think, or if you guys are invested in the whole AI trend, but like he's often very early, too early in most cases. So I just kind of want to take it with a pinch of salt. Anyways, last bit, I'm doing some call to action, so make sure to follow us on Twitter. So my Twitter handle is gentlemancrypto_io. Make sure to give me a follow there because I don't always have the time to hop on a video and tell you all the updates. It's much easier for me to like send out some random tweets. All right, so make sure to give me a follow there, and make sure to follow Roxham TV on Twitter as well. So the handle is @Roxham TV. We're going live right now, so you don't want to miss out any important updates. We are updating every half an hour, not just on Bitcoin, but like all the important news around the world, like geopolitics or AI or macro. So do give us a follow because you don't want to miss out anything. All right, so as I mentioned, I'm changing my show from 4 a.m. Eastern Time to 3 a.m. Eastern Time. Let me know how that works out for you. And I'm also extending my show from 1 hour to 1.5 hours. So same time tomorrow, like from the point being, so I'm going to do 3 a.m. till 4:30 a.m. Eastern Time on both Roxham TV and Jam Crypto. So thank you so much, guys, for watching. I hope you guys have a fantastic day wherever you are, and I'll see you guys in tomorrow's show.